Gold Royalty Corporation, as we mentioned, is a precious metal-focused royalty and streaming company. David Garofalo is CEO and chairman of the company and joins us today to talk a little bit about not only Gold Royalty Corporation, but to educate us a little bit, David. It's great to see you, by the way. Welcome. Educate us on the royalty business. Explain this for some viewers maybe that might be hearing this for the first time. What exactly are we talking about here?
Well, look, if you believe in gold as an asset class, there's a few ways to play that investment. You can buy physical gold or the ETF backed by physical gold, or you can buy gold mining equities, or you can buy a royalty vehicle. And the difference between a royalty vehicle and a mining equity is we completely insulate our shareholders from cost inflation because we get a percentage of the top line, percentage of the revenue. We provide financing to explorers, developers, and operators to build their mines. And we take royalties back as a payment. And these royalties are perpetual. They stay on the deposit for the rest of its mine life. As the deposit grows geologically, then our royalty enjoys the exploration upside. As the gold price goes up, our royalty goes up. So we provide full leverage to the gold price, full leverage to exploration success, but completely insulate ourselves from the cost escalation that I think is a risk in the mining industry.
The company made its $90 million debut on the NYSE American Exchange going back to March of this year. Explain what that means for the company as far as getting more exposure, being on such a big board, if you will, in the NYSE American Exchange.
Well, it provides us depth and access to the deepest pools of capital in the world in the United States. And we did it initially with 17 royalties on development stage assets in the Americas being spun out from an existing mining company called Gold Mining Inc. We raised $90 million and then we merged ourselves with a like-sized company. We came out with a post-money valuation of about 200 million US, merged ourselves with a like-sized company called Elite Gold, and immediately expanded our royalty portfolio fivefold from 17 royalties to over 100 royalties. And then most recently, we announced a three-way merger with two like-sized companies again that'll actually double our size again. So we've gone from a $200 million market cap to 400 and will be $800 million when we complete this three-way merger in November.
And that is, again, going to bring some more attention to the company. And this is just in September, this latest announcement and merger and deal was announced. So what does that mean going forward as far as we move into Q4 coming up here? Talk a little bit about that, what that means for some indexes starting to take a look at gold royalty.
Well, not only do we increase in scale in terms of our market cap, but it does engender index buying. We graduated the GDXJ Van Eck Vector Fund. It's a gold fund. And that saw some passive buying when we graduated to that a couple of months after our IPO. These two mergers have not been reflected in the rebalancing of that index yet. The next rebalance occurs in December. So we'll have increased our size fourfold from when we were initially included on that index back in May. And so that means significant index buying will occur in December when that rebalance occurs.
Just to wrap things up here, David, let's maybe take a wider look here at the overall market because gold has been pretty exciting trade overall this year. How much does the price of gold come into play here? And also give us maybe a 3 to 6 month window of what the company is looking at down the road.
Well, look, I think the gold price is poised for a significant break upwards. And really what's driving it is lower interest rates for longer, continued quantitative easing, a competitive debasement of fiat currencies globally in order to debase the debt. There's no government in this world right now that can fiscally responsibly pay their debt back. So they're going to debase their currencies in order to debase the debt. They're going to inflate their way out of debt. Gold is an accurate barometer of that kind of inflation. I think we're all experiencing double-digit inflation now. If you're trying to buy a house, fill up your tank with gas, buy food, we are experiencing dramatic inflation. And gold has always done extremely well in that type of environment because of its perception over 4 millennia as the ultimate currency. Can't be printed like fiat currency. And I think gold in this cycle could achieve $3,000 an ounce. And that's the real all-time high. If you go back to the last big inflation cycle back in the 70s, when we had $850 an ounce, you inflation adjust that to 2021 dollars, that's $3,000 an ounce. And I see that type of upside in this cycle.
Even, this week we've seen gold bouncing back nicely as we've seen the U.S. 10-year making moves in the same direction. So more to come, as we say, as far as this market is concerned. GROY, guys, on the NYSE American Exchange. David Garofalo, CEO and Chairman of Gold Royalty. A pleasure, sir. Best of luck. There we go, guys. Gold Royalty Corporation, as we said, GROY.